All right. Stream is live. Camera is live. Sound check. If you're in the chat, let me know if you can hear me. Let me know how this audio sounds. Hey, Tyler. What's up, y'all? How's the sound quality? Cool. We'll get started here soon. We'll just give people a minute to get in here. It's a bit quiet. Well, crank me up, homie. I've got my mic turned up pretty loud on my side, so I'm afraid to turn it up much louder than that. So if I'm quiet, I don't know what to say about that. I'm in a different room from the last time I did my stream. You guys might see my background looks a little different. I moved offices. My wife and I switched. So I'm still getting everything put in place behind me. So right now it's just the window and my disc golf discs. Just whatever's we got sitting around back over here. What's up, everyone? Who got in the chat? Jason, Orla, Brandon, Ross, Nick, Rodney, Toast, Tim, TY, Ty, sorry, EOX. There's a bunch of people in here I recognize. How you guys doing today? Weekend's going well so far. We'll do a proper intro here in just a second. I just like to wait a minute or two and let things get rolling. Do a proper intro. Get my headphones on. Hello, hello. Welcome back, friends, to Alpha Beta Soup Live. I'm TXMC. It is April 4th, 2022, and we are live on YouTube. What's up, my people? Get my headphones off here. What's going on, guys? Well, before I went live here, I was sitting here looking at the market and looking at the gains today, and we see Twitter up here on a planet all by itself. Let me get my little red cursor so you can see that better. Twitter up here all by itself, and the entire S&P is down here at sub 5%. Crazy. All just because of Elon buying a 9% stake, right? What's up, JBS, Stale, Trades from the Crypt, Vostro, Derek, Dylan, Nicholas. If I'm missing people, sorry. Lots of names. What's up, everybody? I haven't really looked at the market today. You know, I woke up a little late, and I've been intending to do this live stream. So here in a minute, we'll pull up TradingView, and I'll look at the market for the first time today with you guys, and we can see what Bitcoin looks like, what equities look like, that we get kind of an idea here from looking at this. And then I figure maybe I can show you a couple of charts that maybe haven't been on the videos. And I don't really have an agenda. Maybe we'll just shoot the breeze for a little bit, maybe like an hour or something, maybe longer if there's interest, and just kind of see where it takes us. What's up, Magnate? How you doing, my friend? All right, let's go take a peek at Bitcoin here. So I'm gonna do this the same way I've been doing it recently, by drawing out my little levels of interest. What I like to do And everyone's got their own way of drawing levels. There's no right or wrong way. I don't have some gospel that I subscribe to. I just try to look for pockets of interest in places where there are pivot points, right? Or places where price has avoided as something of interest. And this little zone right down here was one of those places. We've talked about this a lot on my videos recently, how price was just kind of avoiding this and how we blitzed right through it. So this has been an area of interest for me. And then when I see a lot of supply churn right here in recent price action, and I see these long wicks on top of this zone here, this to me looks like another area of interest. So I mark it out with my boxes. And that to me looks like the next place the price would work its way back up to. So that's my kind of loose logic in how I do this. Keep vids to sub 60 minutes or you get destroyed by the algos. Yeah, that's true, I think, Nick, especially for released videos. I've noticed my live stream videos, I've done a couple of these now, have been on the longer side, and they've done okay. So maybe it's a little different for the live streams, but still, good tip. When am I headed to Miami, Carlos? Tomorrow. I leave for Bitcoin conference tomorrow, and then I come back on Saturday. Please save the live stream. It will be saved. YouTube saves it, it records it, and when I'm done, it processes and it's up there for you to view forever. Came over from Blockchain Backer when you duoed with him. You two are amazing. Thank you. A big fan of Blockchain Backer. I've been watching him since before I made a YouTube, and he and I chat fairly often. So he's become a friend, and yeah, really enjoy having him in the space, learning from him, getting advice from him. He's been a good friend and mentor to me. Do I think Bitcoin will hit 50K in the next week? No, I don't. No, I don't, Gary. Just probabilities of it. It could happen. I mean, anything can happen. But 50,000 is up here, and it's taken us a very long time just to get back to this point right here. This is, I'm honestly a little disappointed with just kind of how shallow and ho-hum this price action has been after we finally broke out of this region. But I guess, what can you expect when you look at the global picture? It's hard to expect a lot of bullishness. So, as far as PA, just pure price action goes, the last time we made a video to now, there's very little going on. We kind of thought we'd get a back test of this region here. Let me take off my drawings. We kind of thought we'd get a back test here, and we did. I mean, it was really, really clean. Look at this. And I think if we look at this on the futures chart, I'm pretty sure this backfilled a daily gap on the Bitcoin CME futures. So let's pull up the CME future here. Yep. Okay. You see this gap right here. Because the Bitcoin CME future, the magnet always makes my circles funky. You see this gap right here. TradingView's always doing weird things with my circles. This gap right here came because the Bitcoin pump was on a Sunday, right? If we go look at the pump that we were just observing, this candle right here came on a Sunday, and the CME future wasn't yet open. It opened a few hours after. And so when it opened with a gap. And then over a series of days, price came down and filled in the gap. It's amazing how that happens every time. Greetings from India. Hello, my friend. Am I in the Midwest? No, I'm in Texas. Lifelong Texan. We both have differences seeing the market. Yes. Yeah. Blockchain Backer and I do look at the market differently. And I think everyone looks at the market a little differently. And I wouldn't want to look at it the same way he does, because then I'd feel like we'd have some confirmation bias between the two of us. But there's certainly some overlap there. But yeah, I thought this was pretty interesting here, seeing this gap here for the CME future, and then how price action found its way back to filling in that gap. It's pretty remarkable how when there's a gap, it finds a way to get filled. take that off of there. So, this week, I still have the same base case expectations. Slow, choppy grind up to this region up here, and then we'll see what happens. Really depends on what equities are doing at the same time. And in fact, we should probably go check on them here shortly. Here we go. So we've got Bitcoin, S&P 500, Dow Jones, and the NASDAQ. Anyone who watches the channel is familiar with this layout here. And it looks like a pretty flat day in equities. I mean, we could see that with the stock market map. Here, the S&P map, I mean, everything is clustered together with similar gains right around flat, with the exception of Twitter up here of 25%, which is just ridiculous. What filling these gaps actually means, trading bot strategies. I mean, in some cases, yes, I'll go with it's trading bot strategies. But really, it's just how price is determined in a market. When there is a breakout, there's often a back test of the previous support or resistance level. When there's a breakout in a direction, price often, through the process of discovery and through the process of market participants coming to an agreement on value, different levels get tested. And when certain places on the price chart are leapt through, they're jumped through, and there's no decisions made about those price levels, then over the next period of time, often price finds its way back into those zones for decisions to be made. It's kind of just a natural human behavior. Thanks for the TradingView script. Yeah, so I did want to bring that up. I'll bring that up here in just a minute. I published a new indicator, and I wasn't going to mention it until the stream today. I was just going to drop it on you guys. So I'll bring it up here in just a second. But I'm glad to see that you're using that free ranger. Thank you. Learning a lot about Onchain. Great, Stale. I'm glad you are. Onchain is the study of Bitcoin itself. Since I don't expect Bitcoin to go to all-time highs, do I think it just goes sideways and choppy for 2022? Or do I think it puts in a new low under 30K? So that's been kind of what I've been trying to answer for myself the last couple of months, Ray. And whatever I think is going to happen is just my opinion. My base case for this year, coming into the year, I wrote a thesis, I think on January 2nd on my Twitter page, where I explained what I thought the year was going to look like. And that was before Russia invaded Ukraine. So that kind of threw in some more factors that I wasn't prepared for. But before that, I was expecting Bitcoin largely to be contained in the range that it's currently in this range here. I expect, because we just got done with, a 2-year essentially bull market for all assets. And I just expected ranging for the year, similar to what we had the second half of 2021. I currently have that same base expectation. And since I came into the year with that expectation, the market has not provided me with any new bullish evidence. And price is doing exactly what I thought it would do, which is range in this area. I'm still holding on to that as my base case until I get informed in some new way, right? Until the market invalidates me. So yes, let me bring up this indicator. So I published a new indicator on TradingView yesterday. It is right here, and it's called the Mayer Multiple Bands. There's a link to it in the description of this live stream right now. If you're curious and you want to go click on it, open the description of this video you're watching, and there's a link down below. You can also go to my TradingView profile, TXMC, and check it out here. I'm going to tweet it out after this stream, but I thought I would tell you guys about it first, since y'all are the one actually coming here to hang out with me and watch. So the Mayer multiple is based on Bitcoin's price distance from its 200-day moving average. We've talked about the Mayer multiple on my channel before, and one of my mentors, Checkmate, has a really great chart of it on his website on checkonchain.com, where he has created some bands for the Mayer multiple based on Bitcoin's historical price distribution. So I thought I would run the same exercise for myself, and then I would create an indicator and share it with you guys. So that's what I've done. If you have TradingView, it's free to use. You can just go add it. And it looks like this. And I'll explain to you how it works. So it's based on the 200-day moving average. And what I did was I looked at Bitcoin's price history from the beginning of time, from the middle of 2010 when it first got a price to now. And I looked at how often Bitcoin is different distances away from its 200-day moving average, either above it or below it, and created probabilities based on those distances. And those are represented by these bands. So let me show it to you on my big chart, right? Okay, so I've got this big chart here, and it's got all these lines going through it. And the red one in the middle is the 200-day moving average. In fact, I'm going to take this thing off of the bottom of the screen. This red one in the center is the 200-day, just a simple moving average of price. But when we take the 200-day and we do a ratio between the price and the 200-day moving average, we get what's called the Mayer multiple. If price equals the 200-day moving average, the Mayer multiple equals 1.0. If price is double the 200-day moving average, if the 200-day moving average is at 25,000 and the price is at 50,000, the Mayer multiple is 2.0. Make sense? So now that we understand the Mayer multiple, what we can do then is look at how often Bitcoin spends time at each of those Mayer multiple values over time and get probabilities. So when I look at this place right here, this Mayer multiple value of 1.1, which means the price is about 10% higher than the Mayer multiple, than the 200-day moving average. 48% of Bitcoin's price history has been spent at a Mayer multiple of 1.0. If I look at 1.5, 75% of Bitcoin's price history has been spent at or below a value of 1.5 on the Mayer multiple. So when I get this distribution, this is called a probability histogram. And it's one of the ways that we determine distribution percentages for a metric across time. And so what I've done by creating this is I've then cherry picked some common percentage values out of here to create bands based on these values down below. Oops. So 10% is around a 0.7 for the Mayer multiple. 25%, meaning a quarter of Bitcoin's history has taken place below that distance from the 200-day moving average, is right here at 0.85. I've created several of these bands which output to this indicator. So they've got these percentages down here, right? See this 5% line at the bottom? When price gets down below this dark blue line, it's saying that only 5% of Bitcoin's price history ever has been able to get this far below the 200-day moving average. And we know that when price is moving, the moving average is moving, right? As price is rising, the moving average on a lag is slowly rising. So it takes a very strong market for the price to break away from the 200-day moving average at an accelerating multiple, the way that it does in a bull market back here, as it's breaking above the orange line, above the purple line, above the dark maroon line here, which are 75%, 90%, and 95% boundaries for Bitcoin's history. This indicator is only useful in extreme situations. Well, Raphael, I wouldn't fully agree with that. It's not just for picking tops. It's also a way of identifying value lows, right? In a sense. And it can give you an idea of, okay, if I'm trying to dollar cost average into a position and I want to get a sense of where I think the lows could be from where we are now, well, let's consider the market that we were just in, right? Just the last couple of years here. So if we were sitting here in the summer and price was right here, right around 28, 29,000, and we see that it's sitting at the 10% line for the Mayer multiple, just going off of the 200-day which is an extremely simple price-derived indicator, we could say that there is a 10% roughly chance that price will go lower than this currently. So it's a way of building in probabilities for price action. That's the way that I would use this metric. Not so much. You could also take it level by level, but that's not really the way that I interpret it. I interpret it more on the extremes, like I said. So here we were like in July, and you could say, well, there's maybe a 10% chance that we go lower than here, but there is a 90% chance that we are at the lows based on historical distribution. So that's how I would look at this, Raphael. It's a very simple indicator. It uses no on-chain data, and it's just something to have in your toolkit. If it's not something that you find useful, by all means, do not use it. But if you want to explore it, if you're curious, there it is, free to you. Wasn't expecting to see Tableau. Ryan, this is my bread and butter. I've been an analyst for many years in my fiat job. I worked for a gaming company for many years, producing charts and dashboards for people who don't think about data as part of their jobs. And Tableau was my primary tool. And so what I've done now is just pull in all my Bitcoin stuff and keep making new viz. And it lets me make charts that no one else has. So I like to be able to do that. May I ask how this indicator compares to blockchain backers' theory for this cycle? I don't know if it does, Grant. I don't know that the Mayer multiple plays a significant role in, what blockchain backer thinks may or may not play out for price. In terms of, the things that he's looking at are retrace levels, and currently these probability bands don't even really line up with those. So from his perspective, this probably doesn't weigh too much into his factoring at all. So yeah, that's a Mayer multiple. Like I said, no one else knows that I tweeted it out, or I haven't tweeted it out yet. It's just sitting here on my my TradingView page. It does look like a few people found it, maybe a couple dozen people. So yeah. Where do you get the base data to analyze further in Tableau? Well, my data comes from Glassnode. I have an API pull. The top is currently 132K. Yeah, so hold on, let me go back to this. I want to explain this, guys, because I don't want you getting the wrong impression about this. This does not mean that you should have a price target, and not that you're saying this either, Brandon. I just want to add this for those who are observing. When you see this markup here at the top of this indicator, that does not mean that an optimistic price target for now would be 137,000 necessarily. But it means that if we were in a proper bull market, like if the current market conditions were the same as they were at the end of 2020 or at the end of 2017, and we were ripping to the stratosphere, it could be reasonable to target 106,000 and possibly 137,000 as places to de-risk at the high end. Because if we're in a proper bull market, Bitcoin will rip past multiple levels of the Mayer multiple. So that's the way I would look at it. It's really, these values up here are totally irrelevant to us right now at the current time. It is contextual. And right now we're not in this kind of a bull market condition where you would even think these would come into play. So I would probably ignore these top levels right now. And again, that's just context for those of you guys listening along who maybe don't inherently understand that. So my data, the data I pull is from Glassnode. I have a Python script that pulls a ton of metrics into a big table and downloads it in a CSV. And I use that CSV as my data source. You can see over here as I'm scrolling through all these metrics, and I build all my charts with them. I've got a couple of different dashboards. I've got this one, which is the one I tweet most of my charts out from. I also have one that's got a bunch of derivatives data, which I'll look at here in a moment. I'll show you guys a couple of charts. BCB with the $20 donation. Thank you so much, my friend. You're too generous. I appreciate you. Why is your name Alpha Beta Soup? Shouldn't it be Alpha Alpha? That's funny, Mark. I like the name Alpha Beta Soup. My wife came up with it, and as soon as she said it, it was just like one of those aha moments. Like, that's it. That's the one we're going to use. At BCV, you got some friends in the chat, man. Ever since our collab the other day, I think we've got a fair amount of overlap on our viewers. So that's pretty cool. All right. So what else can we look at here? I do want to look at the derivatives data a little bit. I wanted to look at open interest. Brandon, piggybacking with another $20 donation. Far too generous, sir. Thank you very much. I appreciate that. Is there an indicator that balances out the size of orders versus the quantity of orders? I'm not sure, G Money. There might be something like that out there, some order book derivative. I can't say off the top of my head. What do you call the subs? Alphabets? Alphabets. Live data feeds in Tableau. It's not live. I mean, it's about as close to live as I get, right? I manually pull the data. I run my Python script, which pings Glassnode for all my metrics, and it downloads it locally. So this data is not live, but it's recent as of half an hour ago. As far as XRP goes relating to on-chain, it doesn't have that same level of detail, right? And part of that has to do with XRP's own ledger design, right? I mean, every token kind of has its own accounting methods. They're not all the same. But also the amount of dev work that may or may not have gone into producing that kind of analysis for XRP has not been done, right? But it has been done for Bitcoin. So like if I go to just pull up some random charts here on Glassnode, they've done some work on Bitcoin. They've done a little less work on Ethereum. They've done a little less than that on Litecoin. And other than that, the amount of detail that I can get for some of these other tokens is extremely low. Like there's absolutely zero data on Glassnode about XRP, for example. I don't think Sol is on here. Right? Like AVAX is not on here. So there's a lot of tokens that just don't have this kind of information. And a lot of it is because of the accounting methods these tokens use in the first place, and the amount of transparency they provide us. Bitcoin is open source. Bitcoin is an open source ledger, so we can see everything that happens on it. And since it's been around the longest, it's also had an advantage of time and having people working on it for the longest amount of time. So we've got a lot of detail about Bitcoin that we don't have for anything else. We do have a good amount of detail about Ethereum, but to be honest with you guys, I don't find Ethereum that interesting, like as an asset. It's important because it's the number 2 sized crypto. There's a lot of things that are built off of Ethereum. It certainly is influential and it plays a large role in the crypto market. It's relevant and I look at it, but I'm not passionate about Ethereum. I don't wake up each day wanting to learn more about what's going on under the hood with Ethereum the way that I do about Bitcoin or just about understanding the markets. So that's why I don't focus on it as much. Occasionally I'll notice something and I might mention it, but Ethereum is not my priority, either as an investor or as a content creator. So that's one reason why it's not a focus of my channel a lot of the time. Thinking about the relief rally thesis to the 702 fib, TradingView's fib tool can toggle whether or not to use log or linear fibs. Do you have a recommendation? I just leave them on linear, Tom. I don't use log fibs. That's a kind of an eternal debate. I think Blockchain Backer probably hears a lot of that shit from people because he's been the fib king for the last few years. I leave my fibs on linear. It doesn't matter what the axis of the chart is because the levels are in the same place. If you have a linear fib, whether you use a log or linear scale, if you use a linear fib, the retrace levels are in the same spot. I think it's important. A lot of people look at cryptos on a linear chart, so they tend to play out anyways. But also the debate about linear versus log, I think, is kind of an irrelevant debate because in truth, it's more about learning the intricacies of the tools you have chosen to specialize in. And so if you have decided that Fibonacci retracements are a tool that you resonate with and you want to learn how to have an edge with, pick a setting and roll with it and learn it, right? You will have more edge sticking to a consistent setting and learning the ins and outs of it than constantly changing, trying to find, the best min-max log versus linear, whatever. There are certain ways that markets behave within the boundaries of a setting for an indicator. Just learning that can give you edge. So I pick linear, I stick with it, and that's just always the way that I look at my fibs. Is there a chart that shows the diversity from BC market to the altcoin market? Well, I mean, I think you're thinking about Bitcoin dominance, right? I mean, that's really what BTC dominance is. It's Bitcoin versus everything else. Oops, that's not it. BTC.D. I personally do not look at this metric very much. I don't find it all that interesting because it's a fraction with an infinite denominator. So I don't really look at it that much. I think it's interesting to see directionally what it does over time. But yeah, I don't really look at I don't look at Bitcoin dominance that closely at all because I think seeing the way it moves manifests itself in looking at the total altcoin market cap, also the total three. There's other ways to see the fluctuation between altcoins and interest there and Bitcoin the king. You could just see those two things there. Whereas this is a denominator of Bitcoin at the top and all money at the bottom, right? So I just don't find it helpful from my perspective in the way that I use it. There are some people out there who have some edge with Bitcoin dominance that I don't. But for the way that I look at it, it's hard for me to really use it comparing like this market to this market. That's just my perspective on it. So I did want to just look around at the derivative space a little bit. I haven't been talking about it as much on the channel recently because the global picture is having more to say about the medium-term picture than some apes on the futures market. But something that I watch for open interest is to see its proximity to the 2% level of the market cap or of circulating supply, depending on the denominator that you use. I look at open interest in Bitcoin terms, not in dollar terms. So I compare it to 2% of the circulating supply, which is this line that goes across this black line that you see that's kind of slowly rising here over time. In the background is open interest. And these little orange and blue lines represent days where the open interest jumped or fell really dramatically in a single day. And I like to look at times where open interest gets over 2% of supply. And those are usually periods that enter into high volatility. And you can see back here near the top of the market in April, this was the absolute pico top for 6 months when Coinbase had its direct listing. This band printing red is showing you that open interest was at critical levels. It was over 2% of the supply. It happened again here during the flush out to over 2% of the supply. Here in July, when we reached the market bottom and we really were catalyzed by a short squeeze after the B word conference and we started the climb up out of the lows. Again, high open interest. Same thing here at the market top in October and November. Two impulses of high open interest above 2% of supply. But really kind of interestingly, in the last few months since, and one of the reasons why we haven't been looking at the funding rate so much, why we haven't been looking at open interest so much, it's been holding steady and sideways and hasn't really been threatening to grow the same way that it was back here, right? Like open interest, which is the sum total of all open contracts in futures, right? If you were to go right now and take a Polaroid of every position in the futures market that currently sits open, the sum total of all that is open interest. So we take snapshots of that over time to see the positioning of the market relative to price. So when you could look at volume, which is the actual settled contracts being transacted back and forth, or you could just take a snapshot of everything that's sitting open. That's what this is at the bottom. This is the snapshot. And since early December, open interest has been languishing underneath what I would consider a critical high level, this 2% of supply. It briefly flashed over it here at the end of March. We've had a couple of times where there was like a 1-day period with high OI, but it's been staying sideways with the market going sideways. And having this in conjunction with, let me pull up my perpetuals basis, which is actually already on the screen here because I'm a dummy. Let me pull Bitcoin back up here. So as I was just saying, where are we? Seeing this open interest going sideways, holding underneath a critical level, underneath a point where we would say, hey, that's a lot of OI. That's a dangerous level. That's one that's going to give me pause. OI hasn't been able to break over that level at the same time that we're seeing what we've been talking about on the videos. For any of you guys watching the videos, this non-stop consecutive or consistent rather discount regime, right? This is showing you that people who trade in perpetual futures are selling enough, or at least there's enough of a lack of aggression that the prices of those instruments are always behind the spot index. They're always just a few cents, a few dollars behind the spot index. And they haven't been able to get above it at any point since we were at the market top. And this has really been informing a lot of my interpretation of the sentiment, the temperature of the water, so to speak, in what's going on in the futures market. And when I look at OI and how it has not really been registering these big volatile moments here, I see some confluence between these things. So let me take a moment here. Let me catch up on the chat because I've been talking for a few minutes. Dave, thank you for the donation, $4.99. Keep up the awesome content. Very appreciative of your donation, sir. Thank you. Trades from the crypt, $20. Bro, if we are in for a possible recession in the next months or year because of the yield curve inverting, it seems we might be in for a bear market for the next year or two. First of all, thank you so much for the donation, Trades. You're very generous. It is possible, guys. And when I talk about the yield curve inverting, when I talk about recession risks and all those things with you, it's not my intent to scare you, to make you uncomfortable, to raise your stress levels, or to cause you to feel like you have to go make some decisions about your investments. That none of that is my intent. But I want you to be aware of historical precedent, be aware of bullish and bearish factors that are worth considering, and to take all of those things into account when you are weighing your own strategy for weathering the next few months, right? Because there are a lot of people out there, a lot of people on Twitter, on YouTube, who they only want to hear good news. I notice a distinct difference in the people who react to my tweets when they are giga bullish versus the ones that express a more sober take. Is a distinct difference in the population there. And it's because there are people who just want to hear good news. And those people are not planning appropriately. They're not positioning themselves in a defensive and intelligent way to protect from downside that appears, based on historical precedent, to be very possible in the near future. The market could have other ideas. For all I know, things could just go crazy and we melt up to all-time highs for every single asset, right? Like there's a chance greater than zero that happens, but it's a very low chance. There's a growing chance that we experience a recession in the next year to year and a half. because in my lifetime, a yield curve inversion has 100% of the time indicated a recession within 18 months. It is yet to fail. So that is a data point that I can't ignore. And that's why I share it with you guys, to be aware of it as we go through this journey of investing and analyzing the markets. Would the Mayer multiple be of any use on other time frames? Vostro, you could use the Mayer multiple itself, but my probability distributions are based on daily price closes. So my bands of percentages wouldn't be accurate if you were to look at a 200 average on a 4-hour time frame. It probably wouldn't line up the same way. What do you think about tether dominance? Cal, I see your question from a few minutes ago. What do I think about tether dominance? Only market supports himself right now because of the SEC. I think about tether dominance. I'm not fully understanding of your question. A lot of people ask me about tether. I'm not super worried about tether as an entity or an instrument. If anyone is questioning whether or not tether is just going to collapse, the heralded fall of tether has been called now for about 4 years, and it hasn't happened. How do you protect from downside? Well, everyone has their own plan for that, Grant. Me personally, I've been in and out of markets now for many years. I have only been in Bitcoin since the middle of 2020. In my current iteration of being in Bitcoin, right? I've actually entered and left the Bitcoin market 2 or 3 times before 2020 because I didn't understand what I was doing. I didn't take the time to educate myself, and as a result, downside killed me, and I just sold. Right? I just bailed out of my positions. So what I have learned, the way that I protect myself, and I can't give you financial advice. I can't give anyone financial advice. I have protected myself, by dollar cost averaging on assets that I have long-term conviction in, so that I am less sensitive to short-term price fluctuations. I know my cost basis, but I try to dollar cost average into my long-term Bitcoin position because it makes me less sensitive to daily price changes, weekly price changes, and also it helps me to accumulate at the lows and when price is not at so much of a value. And so I tend to kind of ride through the market. But a lot of people diversify into other harder assets and out of things they perceive as risk. And that's what we've been seeing for the last few months, is de-risking by market participants who are not crypto native, right? Many of us watching, many of you who watch me, who watch Blockchain Backer, a lot of us on Twitter, many of you are crypto native, right? Or you are at least fully embedded in the crypto ecosystem. You have large percentages of your net wealth in there. And when the market takes a downturn, you aren't necessarily bailing out of the market into cash the same way a traditional market participant would. You might to some degree, but a lot of people are still holding their money in their Bitcoin, in their Ethereum stake, in their Cardano pool, like in whatever yield instrument that they're deployed into. A lot of people just kind of stand pat in the crypto space. And so in terms of how to protect yourself from downside while staying in crypto, that's exceedingly difficult to do because you have a highly correlated asset class that you are trying to diversify within, which at this point in time is a monumental challenge, in my opinion. So I think if there are investors who are of the inclination not to simply weather the storm, that's what I've been doing. I have sold nothing. I have moved none of my assets. I have sat on my Bitcoin stash and bought at the lows. That's how I've positioned myself for downside. I've also been acquiring gold for the last few years, that as a side bet along with my investment in Bitcoin. Those are my plans. That's what I do, and I don't change those things based on what price is doing. Any experience with Elliott Wave? Dylan, I'm starting to learn about it a little bit. Blockchain Backer is really good with Elliott Wave, and some other people I follow are good at identifying those things, but I don't have a lot of practice with it. So I'm still learning the basic principles, and I hope to start incorporating it as I move forward. But I'm not at a place where I want to start giving you guys my opinions about wave counts because I don't have a lot of confidence yet that I'm identifying them properly. Can you apply the Mayer multiple to other cryptos? Yes, Tim, you could. But so the indicator I released for you guys to use is specifically for Bitcoin, and it is based on the daily close. So you could do the exact same exercise on anything. All you have to do is get the 200-day moving average and the price and get historical price history. And you could do one of these probability histograms just like I did, pick out some key levels at 10%, 20%, 50, 75, 90 like I did, and make some bands for it. You could do that for anything. I just chose to do it for Bitcoin because it's my sweetheart. Recessions. You have a US bias for obvious reasons. I'm across the pond, so could you use this against the FTSE, for example, in the UK? You know, possibly free ranger. I do have a US bias. You're right. But I will also say, you know, when the US goes through a recession, oftentimes global markets are experiencing the same thing. So you're right. There is a nuance and there's a difference there in, you know, the London market is its own entity, and it may be on its own curve of recession risk. But, you know, if the US goes into one, everything's getting dragged with it. See if I can catch up on some of these questions here. Do I think the approval of a spot Bitcoin ETF will mark the market top? Well, you know, Al Ghul, that's a good question. And I think it's a fair one to ask because when the BITO futures ETF launched for Bitcoin, it was right here. So I think it's a fair question to ask that, you know, if we get a spot Bitcoin ETF, depending on the lead time of the market finding out about it, could that mark a temporary high? I think it's certainly possible. There are moments in history where Bitcoin has a tendency to shy away from good news, to do the opposite of what the market wants it to do in those moments. Like right here, this was the Coinbase direct listing. This was the day El Salvador made Bitcoin legal tender. This was the day that we got the futures ETF in the US market. These are all like major tops, multi-month tops. So that is certainly something to keep in mind. I think ultimately a spot ETF is a positive for Bitcoin, right? Because it creates spot demand and it allows people a traditional way of exposing themselves to spot Bitcoin. But the day that it launches, the week that it launches, it may end up looking like this or looking like this. Have I read The Changing World Order from Ray Dalio? Yes, I have. It's a great book. He has two books that I would recommend, Big Debt Crises and The Changing World Order. Both excellent books that give valuable perspectives on human history. Also a third book, if anyone is into it. So we've got the two from Ray Dalio, Principles for Dealing with Big Debt Crises, Principles for Dealing with the Changing World Order, and then a third book called The Fourth Turning, which, do I have it here in my room? Oh, it's in the other room, so I don't have it here with me. But there's a book called The Fourth Turning. Those three combined give a fascinating, kaleidoscopic perspective of human history, the cycles in which they play out, and can help you to understand where we currently sit in the cycle. We're near the end of a long-term debt cycle and what the fourth turning would consider an epoch. We're near a point of major human change and transformation. It's happening in our lifetimes now. This decade and the decade after this will be periods of tremendous human change. And these things happen every 80 to 100 years. And in a lot of cases, humans alive don't know about them because we tend to die within a single cycle. It's rare that one person witnesses end to end this transformation and lives to tell the next generation. But if you look back through history, these things tend to play out over and over and over again. And we're currently near the end of Pax Americana and of the current fiat denominated system, and a lot of other just cyclical historical arcs are all kind of coming to an end here. It doesn't mean that history is ending. It just means we're at a period of transformation. Very exciting times. Do I apply fast and slow moving average crossovers on on-chain indicators to address buy or sell signals? Yes, I do. I do that all the time. So let me show you one of them here. And just a little secret for you guys, I recorded a video last night that is going to come out in a couple of days when I'm in Miami, so that there's some content to digest and I don't leave you guys hanging, since I'm not sure if I'll be able to live stream while I'm there. And on that video, I show this chart. But since you just asked a question, I'm going to answer your question using this chart. So your question was, do I ever apply fast and slow moving averages to on-chain indicators? Absolutely. So there is one very famous on-chain indicator called the Puell multiple, which I'll throw up here on my chart real quick so we can look at it together. The Puell multiple is a way of determining miner profitability. And it was created by my buddy David Puell, who is an on-chain analyst. And this compares miner profitability on a 30-day average and a 365-day average. It's a ratio of the two. And so I think that a 30-day and a 365-day comparison is a really elegant way of identifying short-term trend compared to long-term trend. It matches up with the month and year, time passage, and it kind of lines up with human behavior, right? We do things cyclically, monthly and yearly. So comparing short and long, 30 and 365, I find to be pretty useful. It's not a hard and fast rule, but I do this across several metrics. So the Puell multiple is based on that. But I did it for some other ones, and one of them is active entities. So the video that's going to come out on Thursday, I break down active entities in a few different ways. But one of those ways is using this chart here at the bottom of the screen. And what it's showing you are active entities. Those are participants on chain, people transacting in Bitcoin that own one or more addresses. Now, the gray in the background is the 30-day average of active entities. And this line, this slower line, is the 365-day average. So you can see the short-term versus the long-term trend. Periods where active entities are higher than the yearly average tend to align with bullish market growth, and times when it is below the yearly average tend to align with more bearish periods, periods of consolidation, of recessionary growth. So yes, that is a long-winded answer to your question, but I do like to compare those things. And in fact, I think I have another chart. Yes, I do. So you asked me about SOPR. So I do this with SOPR as well. So I'm calling it SOPR. For those of you watching, this is the spent output profit ratio. Spent output profit ratio. And the spent output profit ratio is the profitability of UTXOs that are spent on chain. A UTXO is Bitcoin's version of a bill of cash, right? Your address, your Bitcoin address, has UTXOs in it that contain an amount of Bitcoin. And when you transact, the protocol grabs one or more of your UTXOs and sends it to the transaction. And then you are sent back change. So they work a lot like paper bills. And when I look at spent profitability, I like to look at it on a 30-day basis and a 365-day basis. Again, it's the same principle, monthly versus yearly, and you can see it following the yearly trend through a bull market, bouncing off of the yearly trend through each oscillation, each growth of profitability into the parabola. And if you look over here at spending in the last few months, you can see it has been unable to get back over the yearly average and is down here around 1.0, which is what break even is for spent profitability. If it gets below this value, when you see it down below the dashed line, that means people are spending in loss. So we've been chopping around here and underneath the yearly value of spending profitability. So this is another way that I like to look at those oscillating moving averages. How can I set this type of indicator on TradingView? Not sure which one you're asking about. If you're asking about the Mayer multiple, the one that I shared earlier, all you have to do is click on indicators up at the top. If you type in TXMC, it should bring up, some of these are not published, some of these are mine. But here down in the community scripts, you'll see Mayer multiple bands TXMC. So all you have to do is just look for my name in the indicators on TradingView, and you'll see my thing down here, and you just literally just click on it and it gets added to your chart. That's all you got to do, my friend. And they're just some generic, rainbow colors. Feel free to change them to whatever you want to change them to. You just go over here to the settings and you change all the colors. You could also change these to be something else if you wanted. If you wanted one of them to appear like an area chart or something, I mean, whatever. Do whatever you want with it. Have fun. Where do I see gold going in the next 5 to 10 years since we're near the end of a debt cycle? I have a long-term position in gold. It just finished a cup and handle. I think gold is still going to the upside here. It's hard to know how quickly it moves because gold is manipulated. The paper gold market really has its way with the price of spot gold. And so it's hard to project. And I'm not a gold expert. I look at it, I invest in it, I keep an eye on it, but I certainly don't have price targets for gold like that I monitor closely at least. But I think that a $5,000 gold price in the next decade is very possible if we continue on the same trajectory. Nobody can predict anything, only speculating. That is true. Just read The Fourth Turning, explains everything we're going through. Absolutely it does. Also, the guy who wrote The Fourth Turning, his last name is Howe, Howe. He does a lot of interviews on YouTube. So if you just Google Fourth Turning, you'll see him come up, and he does a lot. He did an interview on Blockworks recently, and he explains this whole process in an hour if you don't want to read the book. Do you only buy physical gold? Yes, I buy physical gold. I don't have any gold proxies. I don't have any paper gold exposure or any ETF gold exposure or anything like that. I buy physical gold and I self-custody. All right. I'm just going to hop around here. So the other day, someone was asking me why I'm always talking about Binance. And I want to show you guys why I'm always talking about Binance. It's not because I trade there. It's not because I get ref links from Binance. It's because they're gigantic. And if you look at the futures market for Bitcoin, Binance owns a third of it almost by itself. This blue line is the market share of open interest for Binance only, right? Each of these lines here represent an exchange. We've got Binance, Bitfinex, BitMEX, Bybit, CME, Deribit. These all represent futures markets for Bitcoin, not spot markets. So that's why you don't see Coinbase on here. Coinbase does not have futures. But futures, where people are speculating on Bitcoin price, Binance is 28.5% of the entire market by itself. The next closest exchange is CME, and they are less than 17% of the market. FTX is a close third, around 14%, and everything else is far lower. Look where Binance is compared to everything. It's almost double. It's basically its next two competitors combined. If you put FTX and CME together, you'd have about 30% of the market. Binance is 28% of the market. So it is a massive exchange. And it's why Binance volumes are important to watch. It's also why Binance's funding rate is important to look at, because their funding rate has a specific way it is calculated. And when they are a third of the entire market, they have an outsized impact on the aggregate funding rate for the entire Bitcoin futures market. When we look at dollar margin, so people who trade futures, they can use two different types of collateral, like we've talked about on the channel. There's collateral with the Bitcoin itself, or you can collateralize with dollar equivalents, with cash equivalents like Tether, which is what Binance uses, Tether. And so there's two futures sides. There's the cash margin and there's the coin or Bitcoin margined futures. And the cash margin, the Tether margin future, has really been growing since December. And if we look here at Binance, here's where the open interest or the share of the market for that Tether-based future for Binance was. It was holding steady around 18% of the market. And then in December, early December, we had that big wipeout, right? Flush of open interest, big flush globally, price just dumped down to 42K. And since that moment, and the end of December came about when China cracked down on a bunch of different exchanges, a bunch of users had to go find new places to transact in Bitcoin over there, Binance leapt up in market share. And this is, mind you, this is only one instrument. This is not just Binance. This is only Binance's Tether-based Bitcoin futures. That's it. And it's 22% of the enther futures market right now by itself. So Binance is incredibly important to watch. They take up a huge portion of the market share. And when you look at the trend over time, I mean, this is since December of 2020, it's just going up and to the right. They're not giving up. They're not relinquishing market share. They're just taking it away from others. And we haven't seen this kind of dominance since BitMEX in 2019 and 2020. I mentioned Sol at the beginning. Since I'm a dev, have I seen their product Smart NFT? No, I haven't. I don't follow Sol closely, Solana. I'm aware of it because it's a big crypto, but I don't follow it that closely. I like to follow Bitcoin because it's hard money. It's the thing I have the most exposure to, and it's the thing that has the most transparency and the greatest level of detail. And since the crypto market broadly kind of follows where Bitcoin is going, I like to just focus as much as I can on studying and learning and unpacking Bitcoin, and then the rest kind of falls into place. One thing I want to show you guys. So this is a chart I've tweeted before, but I haven't shown it on the videos because it can be kind of hard to explain. But I just wanted to show you guys because every time I look at this, it makes me laugh. It makes me laugh. So what I've displayed on here are the different exchanges. Each color is an exchange, just like they were on the previous charts. And the bar graph is representing how aggressively each exchange has its own funding rate. So the funding rate, for those of you who are looking at me glossy-eyed, having no idea what a funding rate is, in the futures market, in the perpetual futures market, which is the contracts that never expire, that's where most of the speculation is done for Bitcoin and for crypto generally, is done in the perpetual market. And the bias and the leverage and the balance in that market is governed by the funding rate. And so depending on which side the long traders or the short traders are being aggressive and pushing the price around, the funding rate counters that and encourages traders to take the other side by charging a premium to those in the majority. So if you have a bunch of people going long, pushing a long bias, taking long leverage in futures, it will push the funding rate positive. And those traders will pay a premium to short traders to encourage liquidity to be provided for the other side of the trade. That's a long, complicated way of basically saying the funding rate tries to keep futures balanced. If a bunch of people go long, it charges them and pays it to the shorts. If a bunch of people go short, it charges them and it pays it to the longs. So it's an incentive structure. And when you look at the spring bull run in early 2021, the deltas, meaning the aggressiveness coming out of certain exchanges, was far greater than anything we have seen before or since. And one of the exchanges most guilty of this was Bybit. So Bybit, let me see if I can turn on my highlighting here. It might be easier to see. Yes. Here is Bybit. Bybit is this teal color. And look how big their bars are, right? They just dominate this part of the chart. What that is showing you, friends, is that on the Bybit exchange in December through April of a year ago, traders on that exchange were taking exorbitant, irrational, long leveraged positions in Bitcoin, far exceeding the market average. They were so aggressive, so insanely, mouth-wateringly, smooth-brainedly aggressive that they printed massive funding rate deltas, specifically on Bybit. And if you notice, Bybit got demolished after that, and they've never really been able to regain that same kind of tenor, that same kind of pattern. It hasn't returned. And in fact, if I throw my drawing tool up here, let me get this to where I can draw on my pretty chart here. And in fact, if you look at this, you can see it's just kind of compressing, right? The funding rate is less aggressive than it was, and all of the exchanges are kind of collapsing down towards the mean. And it's really showing that this era of the market that we experienced at the beginning of 2021 was a unique unicorn, and it was driven. The market itself tried to roll over right here. It tried to roll over in the beginning of January. At this point, after we pulled back from 42K, we've talked about this on the channel quite a bit, about how if we go look, you zoom out, it's this part of the market, right, that we're talking about here. This part where we ripped over the previous all-time high, we ripped up to 42K, pulled back to 30, and right here was when we found out that Tesla had a bunch of Bitcoin. This spot that I'm coloring in on the market right here. This point was a high point of volume on chain. That was when we had the most amount of selling. This is when we had the most transaction counts and active entities. It was right here. It was not back here. Anyone who's been watching me for a long time is familiar with this pattern, but I'm explaining it because we're always getting new viewers. So I want them to know, I want them to come along with us on this journey here. So the thesis here, the point is that the market really came to an end around here in terms of volume and activity, in terms of people selling, people buying, the kinds of supply turnover, the spending behavior you would expect to see in a bull market. All of that pretty much wrapped up right around here. And that moment, friends, is right here. It's this spot on the chart. Pull up my drawing tool here, right here. This is the spot where we found out that Tesla had a bunch of Bitcoin. I'm coloring it in just like I did on the other screen. Here's the peak, and here is where I said market activity really started to end. I know this is kind of sloppy, but I hope you're following along with me. The point I'm really trying to make for you here is that right here is when Elon entered the Tesla market, right where my cursor is. And that is where Bybit started going giga long. Look at this. Literally at the moment Elon entered the crypto space. He entered the minds of Bitcoin users predominantly here in this point. He didn't enter the crypto space, but he entered that bull market, right? We found out Tesla had actually brought Bitcoin into its balance sheet, and people on Bybit responded with giga-long leverage. Since then, we've seen nothing of the sort. And Binance, which is in dark blue, is dominating the futures market. As I explained to you a few minutes ago, they are the majority of open interest. They have the biggest market share, and they are the exchange that is the most closely tied to the funding rate as of now. And we see nothing like we saw in the spring. So I thought this was really cool to look at. It tells a story about the market a year ago. It tells the story that we were really running out of steam. And, you know, if you go to zoom in on this part of the market right here, I've said this before. If you go look at this part of the market, again, right here, here's the Elon candle, right? That was when we found out that Tesla had Bitcoin on the balance sheet. Where was that on the retrace? Bruh, it's at the 702, 786, like pinpoint on it. The market was, I feel like the market was about to go do this. If we didn't get the Elon candle, and which then brought in all of the aggressive futures activity that gave us this price action. If we hadn't gotten that, I believe this would have been the retrace. That's my thesis. That's kind of what I think played out last year. And it tells a cool story when you look at all these charts put together like this. I don't know. What's the significance of Binance having the biggest share? How can you garner alpha from monitoring it? Well, I think that if you were to start seeing aggressive longing or shorting, I mean, the Binance future itself has been relatively neutral. So if I go look over here, if I go to Glassnode and I open my funding rate chart by itself, and I just look at Binance, and we just look at the last couple of years here. I'll just look at the last 1 year. So the Binance future, let me take off my moving average. Let me put it on 1 day. Sorry, you guys are watching me do this in real time here, so it's a little messy. So if you'll notice here, the Binance funding rate, look at it. It just stays flat. You see that? This is the clamp. This value right here is 0.01%. 0.01% right here. Now, when you see a funding rate that is at 0.01% and it's green, when you look at it on the chart and you're zoomed out, you're like, oh, that looks like positive funding. That must mean that there are some people going long in futures. But that's not what it means. What that means is that there's nothing happening in the futures market at all because Binance clamps its funding rate to 0.01% when there is not enough of an aggressive bent in either direction. Defaults to this value. And so knowing that Binance does that, knowing that they have the largest percentage of market share, we can then wait to observe breaks in this pattern. Because this is a very consistent pattern now for months, right? It has consistently been doing this. And there's been no break in it. So if we start to see this, knowing what we know about Binance, knowing what we know about how they manage their own funding rate, and knowing that they are a huge percentage of the market, that can help to inform our interpretation of whether or not seeing the funding rate going up or down is meaning anything about those traders. Crypto has some correlation with equities. Why the divergence today? It's a single day divergence. I don't get excited or worried about those things. If you zoom out, it's still highly correlated. So there might be some intraday things. You know, it is a Monday morning. And so it's always important on a Monday specifically to keep in mind that crypto has had an opportunity to react to world events for 48 hours. And traditional markets didn't get a chance until about 2.5 hours ago. So there's going to always be a little bit of a divergence on a Monday morning because you had TradFi waiting all weekend to finally react to whatever unfolded in those last couple of days. So they're kind of market making in a way on Binance. Well, I mean, every exchange makes its own markets. There are market makers everywhere. But the reason it's important is because websites, including Glassnode, including Coinalyze, including CoinGlass, including Levitas, Skew, Masari, all of the websites that people post on Twitter that show perpetual funding rates for Bitcoin and for crypto in general, they use an aggregate. Most of them are aggregating all of the exchanges together. So that's why it's important, in my opinion, to understand which exchanges make up the largest part of that market and how they operate their futures instruments and how it might be different from the others. It's just a way of being informed so that when we look at this, we don't just see green and immediately think, oh, that means people are betting on price to go up. That must mean that there's a bunch of longs in futures because I see green. It's not what that means. That's why I like to explain that. Do I think the funding rate will increase with 702? So that's been something I have been talking about on the channel, is that I think that if you know, let's make an assumption here. Let's make the assumption that this was the local low and that what we're doing here is the retrace rally. Okay, let's just make that assumption here. I don't want to talk in maybes and him and haw about if, well, maybe this is just going to come back down here. Let's just hypothetically assume this is the low. We're going into the retrace. My expectation, and I've expressed this on the channel a couple of times recently, but I'll mention it again here, is I am looking at this price level right here. This is around 50K. And I think that when we get back towards this price area, we'll start to see a change of the guard down here. We'll start to see the futures rate softening, maybe looking a little bit longer. We'll start to see this discount regime maybe looking a little more like this. I think that we will start to see that because right now we're still in the lower half of the price range of the last year, right? If you zoom out, I mean, like, yes, if I zoom in on here, this looks great, right? Oh, let's look at that. Higher lows, structurally rising, excellent. But when you zoom out, it's just, we're still just in a small range in a big range, right? You know, like let's just slap, let me just slap my fib on here and we'll do high, mid, low. So this is just showing us high, mid, low, right? Top, low, middle. Look where we are. We're literally on the middle of the range. So I think that's part of the reason that we aren't seeing much of a change down here. It's part of the reason why volumes are still a little suspect. You know, I talked about the volume profile here kind of declining into this. Not really what I want to see. You know, if you go back and you look here, this is rising volume. This is what a bull market looks like, rising volume. And so I don't really like to see declining volume into what eventually became a breakout of a condensed range. But if you look at it big picture, we're still in a little range, in a big range, which was my core thesis coming into the year. It has still continued to play out, and I think that that's what we're in store for. My nose is itching like crazy today, guys. Got allergies here. Sorry if I keep rubbing my nose on camera. Couldn't the outflow of exchanges be due to the hacking risk narrative? So many people taking Bitcoin and alts off exchanges. So I'm not sure what you mean by the hacking risk narrative, but I do think that exchange outflows are probably going to continue regardless of what's really going on. It's important that we don't see inflows. I talked about this when I was on BCB's channel a couple weeks ago. It's important that we not see inflows to exchanges, but I do expect that the long-term secular trend of outflows will continue as exchanges lose market share. For this year, my target is what? So Grand, this may disappoint you, but I don't have a price target, because I don't feel comfortable making one in these conditions, and also I didn't come into the year with one, and so I feel like if I'm making one now, I'm a little late to the party on that. But if I'm just going to talk about structurally what I see and what has played out in the past, you know, people who watch BCB have probably seen these things before. They've seen him draw these things before. So if I look at the Bitcoin market cap and I look from the 2018 market to where we are now, we reached a perfect 4.236 Fibonacci extension. I mean, we actually really reached it in April, but we truly touched it here in November, right? And Ethereum did the same thing. If we look at Ethereum, it had the exact same experience. Perfect 4.236 extension, right? And when we look at Bitcoin, and I've done this on my channel, but I'm happy to do it in real time as we talk about it. There are places where at the end of a period of growth, there's usually a drawdown. Then there is often a bounce, a relief rally, because price never goes in one direction for too long. And those usually run out of steam around the 702 retracement, around 70% of the original move. And so when we look at that over here on the current drawdown, I mean, look, it happened pinpoint right here, just most recently. And when I look at over here, that's around 58,000. Now, it's not going to be exact. It's rare because of the differences in price and the different exchanges and all of the different places people can trade against price action. It's rare that fibs get touched to a pinpoint. Usually they are a level that gets respected. So when I say 58, you know, it could really be like a box around here. It could be from 56, 57 up to maybe 60K or so. But I really do think this is likely to be the place that Bitcoin rolls up, does whatever it does, and then comes back down and gets below this level and gets below this level. That's currently my base case. Weird compliment. I appreciate your enunciation. I can watch you at 2.5 speed and clearly understand. Most people mumble too much. Thank you, Rational Evidence. I was a theater kid. My mom was a hardcore thespian, and we were always at the theater. She was always working, making costumes, acting, doing plays and stuff, and I was always there. And when I was a kid, you know, I grew up in East Texas, and growing up there in East Texas, everybody talks like this. And so my mom beat it out of me. I mean, not literally, I wasn't beaten, but she parented the twang out of me, and she made sure that I spoke articulately, and it has carried with me. So I appreciate that. Compliments to my late mother. 58K, that's a level to be cautious at. I would say so, Grant. And you know, the market may have ideas of its own. You know, there are bullish things happening for Bitcoin under the surface. You know, could it just completely ignore those rallies and go all the way back up here? I mean, yeah, I guess it could. But there's very little historical precedent for that kind of a move after what we have seen here. So my base case still is, has been, and will remain until invalidated, that somewhere up here is about the best we have to hope for in the current market climate. And when you see that, when you think about this, and then you think about how closely all these other indexes are to their own extensions, it really starts to paint a picture, guys. I mean, this was in one of my videos at the beginning of the year when I posted my market thesis, and I showed you the Dow Jones close to a 4.236 fib extension based on the global financial crisis. Sorry, the great financial crisis of 2007, 2008. The S&P has actually reached its 4.236 fib extension up here, and it's now been chopping around ever since it got there. And the NASDAQ, which is based on a huge cycle starting from the 2000 tech bubble, it is also marching its way towards the top of a 4236 extension. Now, the NASDAQ hasn't made it there. The Dow hasn't yet made it there, but the S&P has. And, you know, these indices directionally move together, but they don't always top at the exact same times in the same percentage growth. So it makes sense to me that there is some deviation. They're at different points of their growth curves here, but seeing traditional equities reaching the top of a cyclical move around the same time that Bitcoin reached the top of a cyclical move, I don't know. The stars are aligning for us not to be in a new bull market for Bitcoin here. It's just hard to ignore those things for me. Do I tie LRC into my base case? Thomas, what's LRC, bud? I'm not sure I know what that is. Apologies. How long will it hold around the 702? Well, there's no way to really know that. There's no way to know that. It could hold there for a day and get rejected. It could spend a week there. It could spend 3 weeks there. But what's important is that if it's going to be rejected, if a price level is going to be rejected by a retrace, it's important that it not then go up and then fight with another retrace level, right? So if it's going to get rejected at the 702, then it's probably not going to spend a whole lot of time up here. You know, we're probably going to see it come up here. We're going to see candles closing in this area day after day. And that might be the sign. I don't like this. I don't like seeing that. But if it breaks out and it starts like going up here, we start seeing candle closes up here, maybe it back tests the 786, that looks like invalidation. Now, BCB, others who use fibs, they may have a more nuanced answer than what I'm giving you right now on that. But generally, if it's going to get rejected by this, it's not going to come up here and dance with the next girl. Logarithmic regressions. I don't use log regressions too much, Thomas. I just don't have a lot of edge in using them. I know that there are people who have done some, I'll say, interesting TA using log curves, but I don't look at them too much. I just use predominantly horizontal price levels and percentage retraces. Filippo, please stop spamming my chat. I see your question. You've asked it like 10 times. Come on, bro. How can I see the indicator of futures, funding rates, open interest on TradingView? So funding rates are difficult to calculate. Sorry, dude, I put you in timeout. I don't know what that means, but you're in timeout. So you can look at open interest on here. If you type in open interest, Binance has open interest as an indicator. You can open it and look at it, right? And if you look at it here, it looks really similar to this line. You see this line, this blue line? See this dip and then the rise here in December? Look. So it is in here. It doesn't have long history. It doesn't go way back in time, but you can look at it. There is also open interest for so but Binance has both of them in here. There's some open interest for some stuff on CME. And as far as funding rates go, I think that there are some other people who have indicators that they've tried to calculate the funding rates, but it's not going to be perfect because TradingView doesn't have all of the information that these exchanges use in their proprietary funding rate calc. So if you want to see funding rates, you could try to do this. You could also go to a free website, coinglass.com, GLASS, CoinGlass. Go here. Click on funding rates. The first row is Bitcoin. Boom, right there. Don't have to pay a dime. What do I think would happen to Bitcoin if a recession occurs now that the 10-2 is flipped? So my opinion is that if we are going to go into a recession, everything is going down. Everything. Except maybe the dollar in the beginning. But I think there's a chance here, there's a non-zero chance that Bitcoin has an opportunity. Bitcoin specifically, Bitcoin, and possibly some other privacy coins like Zcash and Monero, Dash. It's possible some of them, but primarily Bitcoin have a chance to come out stronger in a recession than people are expecting, and that other risk assets may do in the same recession. So I think there's a chance there. But something that I disagree with a lot of people I see on Twitter, an aspect I disagree with, is there are a lot of people, a lot of Bitcoiners. I have a lot of friends who are Bitcoin maxis, and I respect them, and I enjoy talking to them about the markets. But I disagree with them in that many of my maxi friends seem to think that when we get into a recession, that just because Bitcoin is hard money, that it is censorship resistant, that it is designed in a risk-off way, just because of those factors, that it's going to break away and have some kind of dreamland growth in a recession, that it would become the safe haven, right? That it would become the safe haven bid the way that gold was in the 70s and 80s. I think there's a possibility of that, but we're so far away from the average market participant even understanding why Bitcoin is money and it's not just some fucking token. Like, that we're so far away from that I don't think that that's the most likely outcome if we get into a recession. And Bitcoin, throughout its history, since crypto was invented, has been in a secular bull market with equities. Right? Yes, there have been some periods of downturn. There have been a couple of brief recessions, but Bitcoin's bull runs have come alongside growth in traditional equities. Its downturns have been alongside downturns in equities. They go together. And if the global market is going to experience multiple quarters of recession, crypto is going to recede. And I don't think that there's much of an argument against that to be made, because there's no precedent to make against it. No precedent for that argument. Money has to go somewhere. You're right, Robert, but that money has to go somewhere where people feel it will have safe returns, right? And it doesn't necessarily mean that, so high inflation to a degree pushes people out on the risk curve to a point, to a breaking point. And then that risk curve no longer supports them. The reward no longer supports the risk, and all of those all that speculative energy collapses back to safety. And in those moments, if Bitcoin is not understood as the safe haven, it will not become that. It needs to be that in the minds of investors. This is my thesis. It's just my opinion. I would love to hear countering arguments if anyone thinks that I'm wrong. But I just think that we're entering a period of markets that crypto has never seen before, ever. And so it's very difficult to say, well, hard cap supply, inelastic to demand, number must go up. I don't think it's that easy. Eventually, it will become a safe haven bid. I agree, Grant. It will. And that's why I'm investing in it. That's why I don't sell a single Satoshi. That's why when I buy and sell things, it's not Bitcoin. my Bitcoin is an inflows only long-term accumulation bet, because I expect that 10 years and 20 years from now, it will be worth exorbitantly more than it is today. And I don't want to worry about selling my Bitcoin and having to buy it back later. So I just continue to accumulate it over time. You're uploading so often, just can't watch them all. Well, Nies, I have been making them shorter. So, it's funny you say that. My first few videos were really long. My first couple of months, I couldn't make a video less than half an hour, but I've been getting better at them. I think that lately they've been 20 minutes, 15 minutes. I'm trying to keep them a little shorter whenever I can. How to know what fib level has significance? Well, Paul, you learn that just by looking back through time, bro. That's all it is, right? I mean, that's literally all it is. It's just, okay, let's go back in time. Let's see what Bitcoin has done in the past. Like what did it do in the 2018 market peak? I want to know. And if you go back and you look at it, you find out, wow, well, it ripped up here, it did a little pullback, and then it came up for a retrace. Man, it sure did run out of steam right at that 702. That's magical. Crazy how that happens. And you do that, and then you go look at other market peaks, and you start seeing this happening over and over and over again. Let's go look at something that's not Bitcoin. GameStop, right? Everybody loves GameStop. 2021, massive market run, right? Let's measure from there to the pullback to the retrace. What did it do? 702! Bing, bang, bong. Perfect. You can't make this shit up, guys. Markets have a way of playing out proportionally similar ways over time because they are an aggregate of human behaviors, and human nature does not change that much. So we're really measuring like this. The math of Fibonacci really is the math of nature. And so I find it fascinating to use this. And there's so many assets that you can go look at that did this. Like let me go pull up FTM. Look at that. FTM. Perfect 4.236 fib extension. Mana. Perfect 4.236 fib extension. Can't make it up. So it's 11:40. We'll probably wrap this up here in the next 10 or 15 minutes. Want to make sure that if there's anyone asking me questions here in chat that I am answering them. So let me go check out here, make sure I'm not skipping over anybody. Really appreciate all you guys hanging out with me today. Make sure you give this video a thumbs up. I see I've got 161 viewers right now. I'd really like to have at least 161 thumbs up on this video if that's possible. If y'all are hanging out here with me, please give it a thumbs up. If you're not already subscribed, I really appreciate your support. Making this channel, making these videos for you guys is one of my plans to become financially independent. I want to be able to produce content that I find interesting. I want to be able to study and work on things that I'm passionate about and that I'm interested in. And making these videos with you guys, A, helps me to continue learning, and also it helps me to have some of that freedom to do that. So I really appreciate all of you taking time out of your day, out of your lives, to consume my content, to listen to what I have to say. I really appreciate it. Do I use Onchain and TA to time my buys, or do I just dollar cost average? So I've got two different accounts that I acquire Bitcoin in. I have one account that is on a scheduled DCA. So every week it buys a small amount and it goes into one place. And then I've got another account that I buy, got another account that I I wait and look for lows and I manually buy because I like the process of placing orders. So I'm a day trader. My initial kind of entry into being a market enthusiast is as a day trader. I day traded US equities for a few years before I got into Bitcoin. And so I really enjoy watching the level two, watching the time in sales, watching orders go by. And I really like the process of placing my orders. I like putting in the price. I like making a limit order. I like watching it fill. I like seeing orders passively sitting below price, waiting to get scooped up. I just enjoy that stuff. So I have an account that I make sure I scratch that itch. Oh, crypto. Sorry, I missed your question about the DXY. I asked a couple times if you had any thoughts on the DXY and if I use it in my tool bag. So I I look at the DXY, um, but I think other people look at it more than it itself signals anything, because the DXY is just a basket of currencies versus the dollar, right? But within that basket, different currencies are going in different ways. So, like the Turkish lira against the dollar is plummeting, the euro against the dollar not doing well. The couple of other the Canadian dollar not is, I think, about break even with the U.S. dollar. The Chinese yuan doing well against the dollar. There's like a mixed bag there in the DXY. I do look at it occasionally. I think it's interesting to see when it's going up versus when it's going down. But I don't watch it that closely. And in fact, we're talking about fib retracements here, guys. Where is the DXY? It's at the 702 retracement. Now, don't know what that means. Don't know if that means it's going to get rejected by this level and we see a decline in dollar dominance. If we're going to enter a period. So the thing is, in the past, extremely high inflation has caused people to sell other things for dollars, right? Because you have to acquire more expensive dollars to pay off your debts, people who don't print the money. And in the past, the only places you could go to escape inflation was either by acquiring dollars or by buying gold, because those are the only things that really held up. Well, now that we have the crypto markets, now that they exist, there's this whole other entity where people can escape to. And I think that over time, that might have an effect on the way that the DXY plays out in periods of market tightness. A lot of money that used to flow into here out of assets, people selling their stock for dollars. Because that's when you sell stock, you're buying US dollars. That's what you're doing. You're selling ARK stock and buying US dollars. And I think that now that there's this other avenue with Bitcoin and other tokens, I really only care about Bitcoin, but there's a lot out there. I think that has an impact on this right here, because this is really just a bunch of foreign exchange rates. So I think that the signal out of the DXY over the last couple of years has been morphing, and it may be different still a couple of years from now. Any significance to the 702 getting hit so quickly after the 2017 top versus where we are versus what happened in April? So no, I think the reason that it got hit so hard in the 2017 top was because it was a very different market and we had just had a legit blow off parabola, right? We had a massive blow off parabola. And also, if you look at the drawdown here, it's steep. I mean, that is a 50% drawdown in, what is this? 1, 2, 3, 4, 5, 6, in a week. Fell 50% in a week. So very swift drawdown, very swift bounce back up. And this is really kind of a fractal energy play. Doc Everson is a really great trading teacher out there, and he's got a whole philosophy about fractal energy trading. And when you see these kinds of sharp moves like this, they're often reacted to by a sharp move in the other direction, right? It's like a release of energy. You're slamming a ball on the ground and it's bouncing back up. I think that's part of it. I think the drawdown, in a way, helps to produce the energy that goes into the retrace. So Seeing this sharp drawdown, sharp retrace, sharp rejection, right? And that's what all the previous markets were like for Bitcoin. It was even kind of similar here. Though this got up to the 786 on a wick, the bodies of the candles still closed at the 702. Look at that. Even though we wicked up here, it still found a way to close. This was in 2019. This was after the Plus token Ponzi rally. Up here, we found out it was a big scam. A bunch of people went to jail, and the market rolled over. Well, what do you know? Rejected at the 702, swift rejection, swift retrace, swift knockback. And then you go over here and you look. This, very similar. Swift fall, swift knockdown. I think this right here, this being a really drawn out drawdown, this is just kind of a slow bleed. I think we're going to get a slow retrace. This is the kind of energy we've got in the market right now. And if we look at the volume itself is also quite low. Make these colors easier to see for you guys. If I zoom out here and you look at the volume, look at the volume at where it was during the bull run. And look at where we are now. I mean, like there's pockets. There's pockets where it's touching it, where we get these couple of days where it's higher. But generally, the volume is below the levels it was a year ago. So I think that's part of the reason we're getting this long, drawn-out scoop here. Typically, when DXY goes down, BTC goes up. Right, because dollars are becoming less expensive. And so risk becomes more appetizing, right? Chasing yield becomes more feasible when dollars are easier to come by. Where did I learn on-chain analysis? Well, I started by going on Glassnode, and at the bottom of all their metrics, what I did was I went here and I started clicking on stuff. So let me just go to like some random metric that entity adjusted dormancy flow. So I started opening all these metrics, and being the curious person I am, I was like, what the hell does this mean? I don't know what any of this is. So I looked down here and I saw that they had descriptions. And in a lot of their descriptions, they linked the articles. So what I started doing was reading these articles. Now, you may not want to do this, but if you're asking me, maybe you are interested. And on-chain analysis, the people who do it well, they publish their work. They publish their research for you to see it, for you to understand, because we're looking at an open source platform. And the analysis of it is also in many ways open source. And so the good work is published, and you can read it, and you can see why David Puel and Reggie Smith went through their ideas about what the hell is dormancy? What does it matter? Why is it factor into the price? How are we analyzing it? And I went through a bunch of these, right? I've got a whole bunch of them bookmarked on my, let me see if I've got them here. Reading list, on-chain. Yeah. So if I go to my Medium here and I have an on-chain list, look, I have bookmarked every single article that was published about on-chain metrics, and I have read all of them. How do you become an expert? You learn what everybody else knows. There's still a lot that I don't know. I'm still learning every day. I have mentors. David Puel, very friendly person. I reach out to him and I ask him questions. Checkmate, the lead analyst for Glassnode, is a friend of mine and a mentor. I reach out to him and I ask him stuff all the time because they've been doing it longer than me, so I can learn from them. And really, it's just about putting yourself out there. If you want to learn about something, then you find the time to learn about it, to spend in the weeds. You go, you read some articles, and then you give yourself time for it to percolate in there, right? I'll read something. The first time I read this article about the stablecoin supply ratio, I didn't understand everything it was trying to say. There was a lot here that just didn't make sense to me. But I read it, and then I walked away. I gave it a day or two, and I came back and I read it again, and I found that I was understanding some things that didn't make sense before just because my brain had had time to process it. Passively under the surface. And so after you do that a couple of times, stuff really just starts to make sense. The same way that the longer you look at a price chart, the easier it is to notice pivots and reversal points. Whereas when you first start looking at a candlestick chart, it just looks like a bunch of spaghetti. Crypto Bambino, thank you for the $10 donation. It's very generous. I really appreciate it. Since when am I into Bitcoin? Well, Knees, that's funny that you asked that. And you know what, guys? I'm going to show you something. I'm going to show you where I bought Bitcoin in the past. Let me change this up so you can see it a little better. So I made this chart to show y'all that not everybody was a genius about Bitcoin from the beginning. Not everybody is sitting on 1,000 Bitcoin at 50 cents. You know, some of us didn't know what the hell we were doing. And so I have entered and left the Bitcoin market a couple of times in the past. And what you're seeing on here, I actually went and found my transactions from my old Binance account and I put them on this chart. I literally bought Bitcoin and sold it one day later in the 2018 bear market in February. So you're out there listening to me. You're listening to my market analysis. I have done the same dumb crap that everyone who has ever traded a market has done. And then over here in 2019, look, I did it again, guys. I bought Bitcoin and then I sold Bitcoin. I bought Bitcoin, I sold Bitcoin. And in fact, I'm pretty sure I did it for Ethereum as well. Let me go pull up Ethereum. And did I do it for ETH? I might not have. Yeah, no, maybe I didn't. Maybe I didn't save them on here for that. But just so you can see, it was really in the middle of 2020. This line does not represent my cost basis, my first entry. It wasn't literally here. It's somewhere in here. I started buying into Bitcoin. It was after March 2020, and it was before we got back up to this price. It was somewhere around 8, 9, 10,000. I started buying Bitcoin again, and I haven't sold since. I entered the market around here. I'm not leaving anymore. Yes, emotional trading is bad. Not only emotional trading, Big Doge, it's buying something without learning about it. I bought it because someone told me to buy it. And I didn't take any time to learn about the asset that I had invested in. And so I had no conviction, I had no loyalty, and I had no foundation to go, you know what? I see weakness. I'm just going to hold on to it. Thankfully, I got back into the market around the same price that I left at, right? So it didn't end up punishing me over the long term, except that I didn't get to accumulate at these prices for multiple years, which I would have if I didn't sell. So I just wanted you guys to see this, to see that you're not alone if you have done the same things that I have done. And it's not too late for you to learn about the markets and to stop doing this if you are one of these people, because I figured it out. How do candle closes matter in a 24/7 trading asset? Aren't wicks just as valid? For the most part, yes. But there is a rationale behind choosing a consistent anchor point. So if you want to use candle wicks, then always use candle wicks. If you want to use candle bodies, then stick to candle bodies. The consistency is more important than, the consistency is more important, in my opinion, than trying to min-max the difference between the top of the wick and the top of the candle close. Right? Those things are very close together. And there are also traders and algo bots that react to closes, that try to bring prices to a certain range by a close, or that are influenced by the previous candle close. So they do play a role, but you're right that like the daily close on a Wednesday for a Bitcoin isn't the same as the daily close on a Wednesday for a traditional stock asset that has trading hours. So how do I do it today? DCA when I perceive lows. Yeah, so I don't sell any of my Bitcoin at all. Since I started accumulating it on that chart I was just showing you guys, all the Bitcoin I have gotten since this point in the market is still in my possession. I haven't sold any of it. I have my DCA account that goes on all the time, and otherwise I do wait for lows. You know, like when we got this liquidation here in early December, I was buying multiple times as we were falling here, and I was tweeting about it. I think I caught a buy around 43,700, which in the middle of all this was an awesome buy. Like the fact that I got filled was crazy. And then I bought down here. I bought down here because, like I said, I like filling orders. I like actively clicking the buttons. So I was placing purchases down here while my DCA was still going on. What's your opinion on Bitcoin being manipulated in the future like gold is now? It seems like self-custody still won't stop derivatives. That's true rational evidence. Derivatives will continue to exist. People will continue trying to manipulate the market. They can apply some friction to market moves because in the past, like in the 2011, 2013, and 14 markets, you know, when Bitcoin was having those crazy parabolas, there were no derivatives. Everything was spot Bitcoin. So that's why you got such insane pushes. And now with derivatives, they really apply a lot of friction. There's a lot more inertia, you know, keeping price from running in one direction for too long because of the various ways people can expose themselves to its volatility and its directionality. So it has a chance of being manipulated, but I also think rational evidence that it's going to go through these phases. There's going to be periods where derivatives are playing less of a role, and which it's just pure Bitcoin spot mania, which is really what we got right here. And then there's going to be periods where it's derivatives led, and we've got derivatives mania. And, you know, we got a little bit of that here too. And then I think we'll get another period in the future like this, where we have more spot mania, where there's just so many people trying to buy spot Bitcoin that it doesn't matter what people in derivatives want to do. You know, because we had futures markets in 2020 and 2021. There are futures markets here. It's just that the grayscale arbitrage and the people buying spot Bitcoin overpowered what was going on in futures. And it wasn't really until after this moment here, when grayscale left the market in its arbitrage fashion and futures took over, that the price action started to change. Are you still in the camp that Bitcoin will hit a new all-time high this cycle? No, Jordan, I'm not. My base case is that this was the all-time high before a proper bear market. I look forward to being proven wrong about that. As I mentioned in my last video, if Bitcoin rips up here and gets over this price, I will be one of the happiest people about it because I'm long, as I've been telling you guys. I've been long this whole time, and I would love for number to go up, but everything we talk about on the channel gives me pause. All right, guys, we've been going for 2 hours. I think I'm going to wrap it up. What I need to do today is get packed and ready to go to Bitcoin conference. I leave tomorrow. I come back on Saturday. I'm going to try to live stream while I'm there. I've never been to Bitcoin conference. I don't know if they're going to let me run my phone in there, but what I thought about, and you guys can tell me what your opinion is on this. I'd like to hear it. What I thought about doing was just kind of like holding up my phone, you know, just kind of walking around doing like a, hey, look, I'm in the convention, because it's going to be loud and I don't know if I can record properly. But I thought it'd be cool to just kind of hop in, chat. Maybe we can shoot the breeze, talk about what the market's doing. show you guys around the convention center. I could try, or we can just skip it. Haven't decided yet, but I did record another video last night that's going to come out on Thursday that's just got some little tidbits of things I was looking at, so you guys can have something to chew on while I'm away. Did I time the 69K top? If not, what have I learned from it? No, Knees, I will be one of the first to admit that I wasn't aware at the time yet that 69K would in fact be the top. I had seen the fibs. You know, I've watched Blockchain Backer for years. I knew his thesis, but I was seeing things that made me feel like we were in a bull market. But I have since learned that some of what I was interpreting to be bullishness was in fact showing that there was very little interest for Bitcoin at that time. So that's helped me learn quite a bit in the last few months about the market and will help inform me going forward. So that's it. We're going to call it here, everyone. There'll be another video out. When this is over, it'll be, I don't know how long it takes to process, but after it's done processing, this will be live for you to watch. We'll have another video that comes out on Thursday that's already been produced. It's already uploaded. It's just waiting to go live for you guys. And in the meantime, I might try to live stream while I'm there, but we'll have to see. It would be on my phone, and I don't want to give you guys a low quality video, so might not be able to do that. As I mentioned at the beginning of the video, I published a new indicator for you guys. The link is in the description. It's the Mayer multiple bands, which you are welcome to go check out. It's based on the 200-day moving average of price and historical probabilities of price action getting away from each of these percentage levels here. I explained it earlier in the video, and there's a description for the indicator. So if you have TradingView, go check it out. You're welcome to use it. But I appreciate all of you spending time with me today. Thank you so much. I do want to keep doing these in the future. It's been about a month since the last one. Maybe we'll have another one before a month goes by. But take care, everybody. Be kind to one another. Spend some time with your families. I hope you have a beautiful week. We'll be shutting this down. So cheers, everyone. Thank you so much. And thank you for all the donations.